carnage in XPO Logistics is the transportation logistics roll-up that had been absolutely on fire, but has since seen its stock get obliterated over the last 4 months. Shares falling 54% from their highs this past May, including a brutal $2.02 or nearly 8% decline in today's session. So what went wrong here? Or is this the stock market changing its mood? The last time we checked in with XPO on May 5th, this company seemed to be sitting on top of the world shortly after the announcement of its $3.52 billion acquisition of Norbert Dentressangle. That's a big European logistics play. Since then, the transportation sector has been punished. Perhaps more important, market seems to have soured on XPO's roll-up business model. What makes me say that? Because earlier this month, XPO announced that it's buying Conway, a major less-than-truckload or LTL logistics company, for $3 billion. And in just a couple weeks, the stock has fallen $10 from 34 down to 23 and change as of today. Has the story really changed that much? Or has the selling in the stock become way too severe, possibly creating a compelling entry point? Let's take a closer look with Bradley Jacobs, the chairman and CEO of XPO Logistics, hear more about the Conway deal and its company's prospects. Mr. Jacobs, welcome back to Mad Money.
Hi, Jim.
Good to see you, Brad.
Great to see you.
Hey, Brad, a year ago, if you had bought Conway, I think the stock might have been up 10%.
I think you're right.
What the heck happened here?
I can't predict what the stock market's doing. I mean, there's risk-on environments, there's risk-off environments. Our job is just to do deals that we believe in, that we feel strongly about, and long-term the stock will follow.
Do people feel that interest rates are going for high-yield debt has gotten so high that this might be the last deal you can do, or that you had to pay too much in terms of interest to get Conway?
We didn't pay too much. We paid 5.7 times.
That's all?
5.7 times existing EBITDA.
Okay.
Before synergies. After synergies, about 4.5 times EBITDA.
What kind of coupon?
Well, we haven't issued the debt we're going to issue yet, but it's probably going to be an ABL facility. That'll be about LIBOR plus 175, LIBOR plus 200.
So what we think just for people?
3%, 4%.
Jeez. I mean, because Olin today, a lot of people are struggling because Olin's buying this company, and it had to pay, apparently it's paying around 10% because high yield has gotten crazy.
Yeah. Our intent is not to issue high yield. Some combination of an ABL and a term loan, so low single digits. Well, by the way, Jim, we don't need to issue more equity. We don't need to issue one more share, one more amount of total debt. We can take the $1.1 billion of EBITDA that we've got on a pro forma basis, grow that to $1.5, $1.6, $1.7 billion EBITDA over the next few years. We do that, we execute on that, we'll create tremendous shareholder value.
But is it time maybe to do more deals, or time to put to bed the idea of doing deals and just kind of grow this EBITDA, which could be sensational?
For the time being, the focus is on taking this $15 billion of revenue that we've got. We've got leading positions in the main parts of the supply chain and growing the business, becoming more effective, more efficient, more valuable to customers.
Now, some of the analysts in the conference call were saying that, look, they thought they were getting into a technology asset-light stock. Suddenly you're buying a lot of heavy assets, that you've changed your stripes.
Well, 2 years ago we got into assets. We bought Pacer. I got into intermodal, third largest intermodal provider. We got 11,000 containers. Some of our biggest customers do $50, $75 million slugs of intermodal. You can't do that business if you don't have assets. Okay,
well, let me ask you, because I think it's missing in all the commentary, is the company's doing well.
It's doing very well.
Why isn't that discussed anymore?
Sometimes things are in and sometimes they're out. We're just focusing on building the company.
Well, but if you're a shareholder, you're thinking about buying it, how do you know when
I'm the biggest shareholder.
Right, okay, that's a good...
I've suffered the most on paper. And I feel sorry about the short, people get stopped out short term, but long term, I'm extremely confident that the company is very well positioned for dramatic shareholder appreciation. I really feel that.
The timing of the Europe deal, Europe has been turning around. How are the results so far with that? I know that there is someone who we thought might stick with the company is now moved on. So is that a sign that things are not as strong, or is that just a sign that this is the ultimate consolidation of what happens?
No, we refined the organization chart. We had 43,000 employees in Europe. We removed one person.
That's the former CEO.
Yes, and I put in one of my trusted lieutenants, Troy Cooper, who's been with me for 20 years at United Waste, United Rentals. And the business is being run very, very well. We're beating budget there. Customers love it. Everything's going very, very on track.
The less-than-truckload business in this country has been very cyclical at times. If we do get a series of Fed rate hikes and the Fed helps push us into a big slowdown, how do we feel about XPO Logistics?
Well, on LTL, it is cyclical, and your tonnage goes down and your pricing goes down, so your margins go down. But from a cash flow point of view, you can extend the life of an LTL vehicle much, much longer. So cash flow is strong, is sufficient in a downturn.
And is there any sign in any of your businesses right now of worldwide weakness that we keep hearing about, that Fed Chief Yellen alluded to when she said maybe we shouldn't raise?
Jim, I don't see it. What we see in our customers, we're in 32 countries, pro forma with Conway's, what we see is slow growth, but growth. So it's little growth, but it's growth.
And what do you say to people who say, listen, what people want is a stock with a dividend and a buyback? That's not XPO Logistics.
No, because we don't want to give dividends. We want to do stock buybacks. We want to grow the company, and we have amazing opportunities to do just that.
So people who want to look at the stock should be looking at leverage, looking at what can happen when you close this deal, looking at how the global picture may not be so bad. Slow growth would be excellent for you. A lot of cash flow, and that's why people should want XPO Logistics.
Agreed.
All right, fair enough. You got to know what you own, and you have to know your risk tolerance. That's Brad Jacobs, the chairman and CEO of XPO Logistics and the largest shareholder of XPO Logistics. And I think that's important to point out. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.